Fine. The final audit, you advise that it's possible that significant legal claims has been made. Some legal issues are there, okay? Discuss the issues and describe, okay? Discuss and describe. Is it discuss and describe the impact of audit reports and inadequate disclosures of the contingent liability. Fine.
Yeah.
Read once the questions on your own. 2 minutes. I am not going to give more than 2 minutes. Little bit I am putting a time control on that. Okay. Is it over? Is it done?
Yeah.
Fine. What they say? There are 4 requirements. See, they have mentioned very clearly. This scenario needs 4 requirements. Okay, 4 requirements. If it is July 1st, 2005, Perfect Company sells variety of food for dogs and cats. Your firm Kirana company has audited the company for a number of years. You are about to commence the final audit for the year, and the draft financial statements show profit before tax. Material. See, whenever they give you like this, it is a materiality. Is it right? Before tax. Before tax 23.1. Okay? 23.1. 23.1. Okay? Total assets are how much? Total assets are 99.2. Okay? Total assets. There will be some relation to that. Okay? There will be some relation to the we have to calculate the percentage. Okay? We have to calculate the percentage related to profits or revenue or sales. Is it right? Somewhere we have to calculate. Make it very clear. Launch a new brand of vegan dog food, but sales has been lower than expected. Directors are considering a discounted sales price. Veg dog products are valued using standard costing method. Valuation of inventory. Okay, IS2 we have to mention. Okay, immediately. Is it IS2 we have to mention. And the standard costing comprise raw materials. Fine. As of 31st March, Vega dog products with a standard cost of 2 million, 2.4 million, is it right? 2.4 million included as finished goods in inventory. What they are doing? They are talking about the in terms of inventory, regarding the inventory valuation. Is it? Regarding the inventory valuation. Is it? When you are talking about the inventory valuation, what are the points you will take? Any idea? Inventory valuation. Inventory value, substantive procedures of inventory. What we have done? Substantive procedures for inventory. Any idea? Yes or no?
No, sir. Reviewing the schedule of the cost included in inventory.
Pardon?
Reviewing the cost schedule.
Okay. Next.
Assessing post-year end selling prices.
Good. And
recalculating net realizable value to see if it is lower than the cost to verify if there is a need to write down the inventory.
okay. Anything else?
The inventory counting.
Only valuation. Only
Okay.
valuation they are asking us. Keep it in mind. We are not talking about anything else. We are talking about only valuation. Only valuation. First we have to get what? First we have to get the listing. Okay, first you have to get the listing, and we have to compare the listing with 2.5, whether the inventory listing and the total cost is agreeing or not. Second, we have to know what is the quantity last year. Last year how much is the quantity, is it? What is the quantity, what is the quantity that has been there in the physical quantity with the listed quantity. Okay, physical quantity with the listed quantity. Inventory valuation, is it? Now they are talking about so many. See, they are what they are saying. They are talking about discounted wag dog products they are talking. When you are talking about the wag dog products, you have to get the breakdown. You have to write down on the paper. Just take the paper and write down the points. Is that you have to get the breakdown. Fine. Next, when you are getting the breakdown, what happens? You are talking about the standard costing. Is that you are talking about the standard costing. Take the things, number of units into price. Is that number of units into price? You will get, is that you have to recalculate. Is that you have to recalculate. Now, for what they are talking about, they are also talking about the finished products. Is that they are talking about the finished products also of the inventory. Fine. In the finished products, what will happen? In the finished products, what will happen? 1 minute. In the finished products, what will have entire things has been went. Okay, no problem. Fine, it came back. Is it? They are talking about the finished products inventory also. Is it? They are talking about finished. When you are talking about the finished products of inventory, what are the things are there in the finished products? You will have the raw materials. You have work in progress. You have the finished goods. Okay, you have to take that into consideration. Fine. Apart from that, when you are talking in terms, they have been lower than expected. The lower than expected, and the directors are discount sales price. Is that they are talking about this? Write down separately, one by one. I am giving you. They are asking for 6 marks. We will get more than 6 points. Is that what are the things we have to take? Sales price. Is it right? If why what is the sales price last year? What is the sales price this year? Why they are giving discounts? Okay, that's very important. Why they are giving the discounts? Is there any demand is decreasing, something like that? Okay. Now we will compare what is the sales last year, what is the sales current year. Is it right? What is the selling price last year? What is the selling price comparing? Is it right? Next, we will say that when you are talking about the inventory, we will take inventory with respect to year-end inventory. Is it right? Whether it has been taken into consideration in the right period. Is that in the right period? Valuation. Is that? Now, apart from that, most importantly, whenever they mention about inventory, wherever across the topics, wherever they are mentioning the inventory, we have to mention IAS2 inventory, lower of the cost or net realizable value. Understand point? One separate sentence, lower of the cost or net realizable value. Okay, this is a small substance for this. Fine. Coming back to the receivables. What they are doing, one of the read, again you read slowly. One of the PURRFECT company major customer operates a chain of pet stores, 23 stores across the country. There have been reports in the press of several months that ILA company sales and profits falling. Receivables, understand by receivables, credit sales. They have reduced the selling prices. So many things are there. Link the scenario. In 2005, announced 11 of the stores were to close. Right? As of 31st March, going concern. Receivables means collection will be difficult. If collection will be difficult, going concern issue will come. ISA 570 mentioned there. PURRFECT company trade receivables 2.6 million outstanding. It's not a small amount, material. And no allowance has been included. You have to discuss with the management on what basis we have made the assumption of 2.6 million. You have to discuss with the management why we have not made the allowances in the balance sheet at the year end. Is that? We have to make on what basis you have judged it. Okay? Simple points. On 25th February, it was discovered that a batch of canned cat food has been contaminated with insecticide which could be harmful to cats. This batch has been dispatched in November already. By 31st December, they received legal claims 1.9 from customers whose cats have eaten the contaminated food. When you are getting the things, first and foremost, whenever there is this is the standard procedure we have to adopt. First and foremost, whenever there is a claims, you have to review the correspondence between the customers and the claims that has been and the client. Okay, how much, why they have, on what basis they have communicated to the client. Okay. Next, when we are talking about the thing, we are having a claim, take the legal opinion. Is it? First you have to think about the correspondence. Then you are thinking about the taking the legal opinion. Is it? With the client permission. Understand point? We are taking, see, these are the things. Is it right? We have to review we have to take the opinion of the lawyers with the permission of the client. Okay. Next, third one, whether there is a probability that this claim will happen or not. It is not that every company is putting the claim and you have to, nobody will do. There is a probability. You also fight for it. Is it right? The client will also have means I'm saying fight means legally you will also defend yourself. Is it right? Defend yourself. Next, this is a 2.4 million, a huge amount. Board meeting. You review what you inspect. You inspect the minutes of the board meeting, because this is a huge amount. If this is the thing, definitely at one point of time it had been discussed in the board meeting. Any correspondence is there. Any minutes are there with respect to the minutes with respect to this issue. Fine. Next, when you are talking about the thing, what they are saying, the batch has dispatched and received legal claims for the customers. Fine. Anything you can add to this, please?
No.
No, you have to add. Try yourself.
The disclosure in financial statements.
That disclosure. Whether it has been disclosed, yeah, good. Is it? They have been disclosed in the financial statements or not. Anything else? Think, it will come.
Post-year-end bank statement.
Huh?
Post-year-end bank statement to verify if there are any payments made to that customer.
Is right? Because what happens, they have sold it, they have sold it to the, any payments you have made, is it right? Any payments you have made to the customer during this period. Anything else? Good.
You already mentioned the meeting with and discussion with
another one, last one, very important one. You just cannot rely on orally, okay? You have to get written representation from the board of directors, from the management. Very important. Whenever there is such a large amount of materiality is involved, make it a point, you have to obtain a written representation from the management about whether the claims will be valid or not. The probability of validity you have to get, and you should also write on what basis assumptions has been made while giving the written representation. This much only you have to write.
But they cannot rely on this only, right?
Pardon?
But they cannot rely on this procedure only. I mean the written representation.
No, we are not. See, we have to get a written representation. Okay, what is one of the evidence? Is that one of the procedures we have to follow? Is that one of the procedures we have to follow? Whenever one of the procedures is, if there is a materiality, we have to get a written representation. Is it clear, or you are thinking something other?
Yeah, that's it.
Fine. Now, fine. 1 minute. I will take the screenshot of this. Fine? Now, go for the solutions. See that. Whenever I'm giving you a complete picture, I'm giving you a complete update of this. Okay? How we have to do what? Refer these things from now onwards. Okay? They ask about substantive procedures, valuation, receivables, okay, and auditor reporting about the requirements. Fine. One mark per well-described procedure, maximum 6. Is it? They are talking about maximum 4, okay, maximum 5. Issue, discussion of the issue, disclosure. We'll get back to this, okay, we'll get back to this at a later stage. Fine. Now, what they are saying, go one by one. Okay, see, we have to take any 6. How many they have mentioned? 1, 2, 3, 4, 5, 6, 7, 8. In examination, when you are writing it, listen carefully. If you have put something, you see, when you are writing, you will write whatever comes to your mind. Okay, and you should make a provision that you have to revise very fast at least once. Okay, you have to make a provision for that. Is it right? You can do at the end of each question, or you can do at the end of, don't close the exam. Don't close the exam at all. Make it a point. Is that you should not close the exam at all. Automatically the exam will get closed. Don't worry about that. Sometimes what I listened recently, that sometimes 10 minutes, 5 minutes, something happens, okay? Plus, so don't get in a panic mode that, oh, I have not saved. Automatically, the moment the clock ticks over, is it right? Automatically, once it is closed, by default, it will be saved. Okay, it will be saved. So don't worry about that at any cost. What they are saying, they have mentioned something here. Very small, very crisp. Okay, very small and very crisp. Obtain and cast the listings of products and agree to the total. First, you should make it a point that the total is right or not. Understand, the total is right or not. That is the first thing. What happen is, what are the products, and agree to the total. Second, agree the quantity. Agree the quantity. As the year end, whether the quantity is correct. Focus on valuation only. First we are talking about the total. The second we are talking about the quantity. The third we are talking about the cost. Is that the third we are talking about the cost. Get the breakdown of the cost of different products. Is that different products, and discuss the management. See, where standard costing. How every company will have its own method of standard costing. What are the assumptions made by the management with respect to standard cost? What we are doing, the first one is the total, the second one is the quantity, the third one is the cost, the fourth one is recalculate the cost. You multiply. Is that multiply by quantity into price? Is that multiply the point number 2 with point number 3. For a sample of finished goods, obtain standard cost. In terms of what is the thing, you have the raw materials, you have what is the labor cost. Is that labor cost? This is the standard cost. What is the cost, labor cost as per the timesheets? Any overheads are there? Is there any overheads allocated? Then you should know that how much we have allocated and what is the nature of fixed overheads are variable. We are not writing that. Okay, overheads to invoices, and they are of a production nature. Is right? Production overheads. Compare sales prices over time. Test price has reduced because falling demand. Why they have reduced the price? That's very important. Is it right? They have reduced the price. Compare the prices. Because quantity is less, demand, sales is decreasing, maybe we have to reduce the price to boost up the sales. Compare sales prices over time to establish if a price has been reduced because of reducing demand. Next, compare actual sales per unit with budgeted sales. We have not mentioned this. We have not discussed this. Is it right? Actual per month with the budgeted. Again, we will know, yes, why there is a decrease discounted price. The point of discussion, the point of contention is why there is a discount price. Whether you have budgeted sales, we have budgeted more, the sales are going less. Okay? From before and after the year, how much actual sales are expected and discuss with the management. Select a sample of items of inventory. Is that? We are talking about inventory for post-year invoices. Is that? For post-year invoices. And compare whether we are working with the net realizable value. Is that right? Net realizable value. This much you have to be very clear. Is that? See the thing, the flow that happens. First you have to do the casting, okay, totally. Second, we are talking about the quantity, cost, okay. Then you have to calculate the total cost. Then you are talking about the standard cost, basis of standard cost. Then you see why there is a discount. What are the reasons? We have to know. Is it? The next is what is the actual sales and budgeted sales. And the last one is whether it has been done as per the net realizable value or not. Is it right? Next. Are you clear about this?
Yeah.
Is it? Review. What happens with respect to the auditing receivables? Okay. Correspondence should be established that the payment difficulties. See, people are not paying. Okay, customers are not paying. Then definitely it will be a question mark. Okay, whether the customers have been informed you that there will be a delay payment. So, in most of the cases, what will happen, if there is any such thing, the customers will inform you in advance that we will delay. Is there any correspondence is there? Is there with respect to payment difficulties? Is it? Definitely. If there is any correspondence, it has to be considered. Review the age of outstanding debt, aged receivables, okay? The outstanding debt, whether it is more than 90 days, more than 180 days, how much it happening. Is it? See, when we are talking about the receivables, we have to be very carefully, we have to mention credit controller. Is that? We have to mention credit controller. Is it? Because he is the person who is charged with governance. Is it? And what are the credit terms and conditions? Second point, review post-year receipts, anything which I have received after the year. Is it right? To establish how much debt has been recovered by the time audit completion date is over. It is related to past year. Is it right? People are there. At the end of the year, if any outstanding in there, they will chase. Is that? They will chase the customers that you have to pay, we have to pay, we have to close the accounts. They will delay, but they will pay. Is it right? But after the year end, they will pay before the audit completion date. Is that? You have to track it. Inspect board meetings, whether there is any concern is there. See, if this much seriousness is there, this much severity is there, definitely it will be a part of the discussion in the board of directors meeting, that we are not getting recovered receivables on time. Yeah, we are not going to require any significant issues are there, any payment problem. Discuss with the management why no allowance has been made. They have not made any provisions. Is it right? They have not made any provisions. When they have not made any provisions, they should have some reason. Is it right? They should have some reason, and when they are giving the reason, we have to assess. Is it right? We have to assess the justification. We should know it is viable, it is acceptable or not. Is it? This is with respect to standard one. Slowly and steadily focus on that. Now the last one, sorry, it is legal claims. What will happen? They are saying that the client's customer will go against the company and they will claim. Okay, review any correspondence that the details of the claims and amount being claimed. Is that if sometimes it happens, if there is anything is there, companies will settle at their end only. They will not push. Is there any correspondence is there with the client? Is that anything which has they asked us that you have to claim? Review correspondence with the lawyers. Is that with the client permission? With the client permission, third party. Okay, contact the lawyers to establish the result, likely outcome of the claims. See, when we are talking about the claims to such extent, we should know that yes, the claims will be successful or will not be successful. Discuss with the lawyer the likelihood and what is the potential future claims. Legal issues, lawyers will be the focal point. Okay, legal issues, lawyers will inspect board meetings to establish that any circumstances of contamination. See, this is not a small issue, is it right? This is a big issue. Then definitely it will be discussed in the board of management, okay, board of directors. You will have the minutes. Compare levels, what are the last year returns with the current year returns. What is the sales for the last year with the current year? Is it right? Compare level of returns and claims to date against sales volume. What is the sales returns you have? See, if product is not good, people will return it immediately. Sometimes you can say that yes, customer want to claim money. In so many cases it happens. Is that customer? It's not so easy that you will give them back. Review post year after or reporting date. Is it right? For damage settlements, and compare any amount provided in the year to assess the reasonableness of the provision. Is that review post year end payments for damage settlements and compare with any amounts provided at the means you have any, maybe if there is a reasonable good reason, you will pay the damages. Any correspondence is there. Obtain return representation from the management always. Is it last but one point? Is that that they had no contamination incident, no other product liability with the management are aware of. Is that obtain that nothing has been happened. Okay. Then see, you are talking about the lawyer. You have to give lawyer the complete inputs. Review the draft statement to establish legal claims are appropriately provided. When you are talking about the provisions, see, whenever you are talking about the provisions, keep it in mind, you have to mention IS 37, provision, contingent liabilities, contingent assets. Is it contingent liabilities, contingent assets? Fine. I will send you this before the end of the day and just revise this. Okay, just make a revision of this. Yeah, what is the issue and impact? See, now you have to make calculations. Is it right? According IS that there is a possibility of additional claims as a contingent. Any claims comes under contingent, okay, as it is possible but not probable, okay. It may happen. As the claims may be significant, the issue represents a matter which is fundamental to users' understanding. See, you have to mention, is that it will have impact on the audit report, is it right? It will have impact on the audit report, whether it has been disclosed in the financial statements or not. You should know whether we have made a adequate disclosure that you have represented it not. Is it? Now, what is unmodified? Then an unmodified. Unmodified means to the extent what we have to say should be given, but the auditor should relate an emphasis of matter paragraph. These are the technical points. If you are not changing an audit report, unmodified audit report, then the auditor should mention emphasis on matter paragraph. Means you are drawing the attention of the users of financial statements that by you are not hiding anything, okay, you are mentioning what is there. The disclosure in the financial statement by cross-referring the user's financial statement which disclose that possible claims. Yeah, you are just mentioning that. You find I am not changing any report, but I will mention this as a part of emphasis of matter paragraph. These are technical points I am reminding again, emphasizing that the audit report, audit opinion is unmodified. We have not changed the audit opinion. Inadequate, this is related to what? This is related to adequate disclosure. Fine, you have to disclosing to the extent possible. If there is no disclosure in the financial statement, disclosure is considered to be inadequate. Then indicates, now you are going for me negative, that the financial statements are materially misstated. What is the question they mention? They mention in the question very clearly, discuss the issues and describe the impact of audit report, both adequate and inadequate disclosure. Is that both adequate and inadequate disclosure? Is that you have to mention with that when it is going to happen. If adequate, fine. These are the things. What you are doing, they are mentioning everything. You are not modifying the report. You are just mentioning an emphasis on paragraph. If it is not disclosed sufficiently, is it right? Then as this lacks adequate resources, is likely to be material but not pervasive. Is it? It is material, is it right? It is not going to be continued, but it is material. Then if it is not disclosed, then what you are doing, you are mentioning qualified opinion. You have to, where you are adding audit qualified opinion will be added to the auditor's report discussing that, and the opinion paragraph will be modified. It is not disclosed. Understand? Inadequate disclosures. Then you have to mention that it has not been disclosed. It is materially misstated. It is material but not pervasive. A qualified opinion will be given. Is it right? You will add a qualified paragraph and the matter after that discussing and your opinion you will modify. To say that except for this, see, these are the very, very important terms, okay? Except for this, everything is fine. Is that except for this, everything is fine? Is that you have to mention in your opinion paragraph. Is that you have to change the opinion paragraph and you have to mention except for this others are true and fair. Is it clear?
Yeah.
Substantive procedures for valuation, substantive procedures for receivables, substantive procedures for legal claims. It will be there. If you take